Guys, happy Friday. It's good to see both of you. Tape's gotten markedly worse here, even in the last few minutes, Manish. Even as I know Goldman said last week or earlier in the week that there'd be stock to buy, in their view, come month end. What do you think's happening right now regarding sentiment and positioning?
So I think both are quite negative right now. So, you can look at it in various ways, based on the actual data that we see from ETF and mutual fund flows. They have actually turned quite negative. Sentiment surveys have turned negative. Even anecdotally, sort of the institutional investors that I speak to have actually been sort of bearishly positioned for quite some time. And so things are pretty negative right now. And the news continues to the headlines risk is continuing. You're seeing sort of negative headlines from what's happening in China. You're seeing possibility of a ban on Russian, energy imports in Europe. Although that's not a base case right now, but the things are looking pretty grim.
Yes. And I do wonder, given all that, Chris, the GDP number yesterday, Chicago PMI this morning, I mean, is there any inkling at all that 50 basis points next week might not happen?
I don't think so at this point. The GDP numbers were too strong underneath. We had some, I think, issues with respect to exports. I think everybody knows that, as well as inventory build or slack in inventory build that contributed to the weakness in GDP. But the consumer's in a decent place, and that consumer spending number, and I think more importantly, the perniciousness of inflation throughout the system really has the Fed in a bind. They're going to have to go 50 basis points at this meeting, and it may set them up for a few more after this. I think to Manish's point earlier, the bigger message may be the market's looking at this as if Chairman Powell may have to think about what his Volcker moment is with that inflation data. You mentioned the PMI. We saw the ECI, the employment cost number, is also up. It's really crept throughout the system. And I think the stock market's reacting to that. It's being led around by the bond market and the anticipation that the Fed's going to have to have a much stronger inflation fighting story.
Dig into your comments a few moments ago. I mean, we've been seeing just incredible intraday swings within the equity market, not to mention on a day-to-day basis. It's raised a lot of questions about really how healthy is this market. Given the fact that it is so volatile, how should investors be positioning themselves right now? I mean, are equities still the way to play this, or should they be looking at other asset classes?
I think from a longer-term perspective, we still would want to have equities capture that equity risk premium in portfolios. I think right now we want to be very careful. Our messaging to clients and to our wealth managers has been oriented towards, if you have extra cash, hang on to it. If you're underweight, now is not the time to rebalance. We want to be a bit more careful. I think there's more turbulence ahead as we get through the summer. Where we may get a turning point, and this will lead to how you think about asset allocation now, is when the inflation numbers start to roll over. We don't anticipate energy numbers coming down till this summer. That may give the Fed a little bit of breathing room, and maybe it stabilizes the bond market, which should stabilize the stock market. In the meantime, it's more defensive. It's a bit on the energy side for us. It's more in healthcare, less in the consumer, less in financials, given that the Fed's going to have to move more aggressively. At the big picture level, though, equities, as I said, we're still there, but we're opportunities to manage for inflation, add commodities, which we've done in the last several months, as well as for clients that are qualified. There's lots of interesting stories in private markets because of the symmetry between public and private. Public credit, public real estate, you get it. So the opportunities there look still compelling to us.
Shepard Smith here. Thanks for watching CNBC on YouTube.